This is Annuity Straight Talk. Since 2008, your host, Bryan Anderson, has helped clients nationwide navigate the complex market for annuities. With Bryan's assistance, hundreds of clients have achieved a profitable and secure retirement. I would know, because Bryan has answered many of my questions concerning annuities and retirement planning. So that you can benefit as well, let's get started. Here's Bryan.
Hello and welcome everyone to the Annuity Straight Talk podcast, episode number 58. My name is Bryan Anderson. I'm going to think of a title for this one later. It's more or less just an update because I've been out for a couple of weeks. I skipped last week. As you guys know, just got back from the elk hunt. So last one, elk hunting and annuities. Figured I'd tell a little bit of the story and just kind of do an update on what has been happening in the markets since I left, to let you guys all know that while I did not pay attention to it, I am caught up to speed and ready to go help everybody figure out solutions to problems and finding good places for money. Protection is key when facing retirement, and I'm here to keep it all in context for you and make that transition as simple as possible. As I talked about in the podcast, elk hunting and annuities, it's a time for me to disconnect. And while I try to kind of keep an idea of what's going on, a little bit about my schedule when I was doing that, everyone's a bit different. This one, we were, kind of truck and camper based. So usually wake up at 4:30 in the morning, coffee, quick breakfast. Sunrise is 6:30, 6:45. So we try to be hiking about 20, 30 minutes before sunrise and be in a good position to see what's going on when it becomes daylight. Elk hunting in the fall in September is really good because you can hear them. The elk are bugling. I talked to one couple who was going from Texas to, I think, maybe Colorado just to watch the elk rut. So you can go to some of the national parks and all that stuff, and you can get a really good idea. The action is just really, really exciting. Anyway, so be up early, hiking around, and then it warms up during the middle of the day. A couple of days were pretty hot. Once it warms down, the elk will bed down, usually get kind of quiet for a while. And so, by 11 o'clock or noon, back to the camper, relax. I had a cell booster, so I'd hook that up and get to check my voicemails and stuff. And, you have until 3:34 in the afternoon. It's dark by 8 or so at night. And those elk start getting active again. And it's a good time to watch them and see them. And so, to be honest with you, 95% of the time, you're just hiking around, looking for them, watching them, kind of get an idea of how to hunt them, how to get close to them. And it was just an unbelievable experience. So, but that 3 or 4 hours during the middle of the day is when I kind of got to maybe do a couple of emails. Like I told everybody I wasn't going to, the plan wasn't to be completely available. But, I looked at the Bloomberg Open, the Bloomberg Close, looked at interest rates, and I got them up here on the bigger screen. Let's see. So the big headline on Bloomberg this morning, so this is Monday, September 26th. And I like watching, Bloomberg during the day. I more or less just read headlines if something's really striking to me. But what I think is very, very important, very interesting, the big headline says, traders who just want to survive are sitting on $5 trillion cash pile. So don't feel bad if you haven't, or have a hard time making a decision, have a hard time placing assets. If there's $5 trillion in cash sitting on the sidelines from the market, we're talking about traders, not just everyday investors, people that kind of make their living doing it, institutional and private as well. They're sitting on cash because everything's kind of up in the air right now, a lot of uncertainty. And I think a few weeks ago, John Balmer and I did a podcast, The Stock Market Head Fake. You want to check that out. John read some charts and kind of explained trends in the market, things that you want to look at. we've been kind of calling for some volatility. A few people questioned that, but we wanted to remind everyone that those things don't happen. The stock market never just drops in just a day. We've got some really negative indicators coming in: rising interest rates, inflation. The Fed saying they want to. Well, they don't say they want to. They said they might have to crash the economy just to keep inflation in check. So it's kind of a rough time to be in the market. Not a lot of positive things are going to come out of that unless you're, a super hot stock picker and you're able to pick the few that do rise in tumultuous times like this. But because rates are up, and if they crash the economy, then, or if the economy crashes, typically interest rates will drop, and they've got some ammunition to kind of get it going, kickstart it. Could be a while, but this is why it's been a great time of the year for annuities, because rates are high. One thing, a new client of mine recognizes, he didn't mind locking in for some longer terms. He did a nice ladder from he's at 3 to 7 years, and maybe we'll go a little bit longer, maybe on a couple. But, he thought, well, in 3 years, do we know rates are going to be as high as they are now? I do believe they're actually going to come back at some point. I don't know when, but, he nailed it, and he said there's reinvestment risk. So, yeah, for a 10-year annuity, you got a 4% base rate, and it's the same as a 5-year annuity. But in 5 years, do you think you'll be able to get better rates than 4%, or are you better off just keeping that solid rate? And again, talking about, index annuities and fixed annuities. Fixed annuities, the guaranteed rate, that's the building block for the index annuity, gives you the upside and the leverage with the indexes, with the participation rates, the cap rates. And so not a bad time to be locking into safe assets right as, things kind of seem like they could fall off the cliff. Now, it's not going to happen today or tomorrow. I'm looking at the Bloomberg close. The S&P was down just shy of 1% for the day. This is Monday the 26th. It was pretty rough on Friday. Expect probably some ups and downs. It doesn't go straight to the bottom. It's going to bounce around on the way there. So there's time, there's going to be points in time where you get kind of tiny little rallies and stuff like that. But as we've talked about, the trend suggests it going a little bit lower. It is for informational purposes only. It is not at all to convince you to make a move now, but just talking about whether if it's time that you think you want to do something or need to do something, this isn't a bad time to do it. So again, keep it all in perspective and realize we're talking about long-term solutions and long-term planning. But as of the close of business today, the 10-year Treasury is 3.9%. That is the highest I've seen in a while. It seemed to kind of steadily climb over the last few weeks. And again, it's interesting when you take kind of 2 days. When I'm sitting here, I do this, 4 or 5 times a day. I look at kind of what the market's doing and what interest rates are doing. Being in fixed income and annuities, interest rates are the biggest driver in that. So I'm always curious where trends go. But, when you kind of take 2 weeks off of doing it every day, it's kind of a surprise. It's like coming back into a brand new world. And one thing I like to look at as well is right behind me on the big screen that you might be able to see in, I don't think you can see it really all that well, but that's kitco.com, precious metals. So gold is trading at about $1,620. It's down about $100 an ounce in the past year. And silver's at $18.38. I think that's a great buy on silver. Gold could go a little bit lower. Interesting to see what commodities are, and it's kind of the safe haven asset. I think those things will take a little bit of a backseat when you've got healthy interest rates and fixed income. The 2-year Treasury's at 4.25%, so really good short-term money. People are talking about having CDs at 4% for 1 year, 2 years, and again, let's think about the reinvestment risk of that. I don't know whether it's a good thing going forward. And if you locked in something a few months ago, 4 or 5 months ago, I'm going to tell you, a lot of people got, short-term fixed annuities have been really popular this year. I have no problem with that. I support the idea. I kind of talk about the value of all things depending how long your plans are. But some people, let's say you got, 4 or 5 months ago, you got something at 4%. And if you waited until now, you might be able to get that same thing at 4.5%. So if you're talking about a 5-year deal on $100,000, 0.5% is $500 a year. It's $2,500 plus a little bit of compounding. So call it $2,800 over a 5-year period. But if you got 4% 4 or 5 months ago, 6 months ago, that's a couple $1,000 in interest right there, plus the compounding over time. So there's a cost to wait. And if you're waiting for things to get better, you have to think about the time you have to wait until it gets there. I firmly believe we might see some stuff. We've got a couple fixed annuities that are approaching 5% now, but longer time periods. And again, if you're waiting, a lot of people tell me they're going to wait. And so I want to, just remind you that there's a cost in doing so. Now, the nice side of that is I hear a lot of people talking about money markets that are paying 1.5%. It's not exciting, but dang, it's a whole lot better than it has been. A lot of people weren't getting, a tenth or 1/4% for the past several years. So really good time to be in annuities. And honestly, a lot of people want to buy into the index annuities at the bottom of the market, but then, you're dealing with lower rates. Oftentimes, it's just a great idea to get something locked in. And so these are the kind of all the things that I've spent the last few days. I think I got back last Thursday night, touched base with a few people, sent everybody a note on Saturday just saying, hey, I'm back and going to get this stuff going. But I'm having a lot of fun doing it. And again, I want to thank everybody for the patience as I went off and recharged my batteries, kind of got mentally back into the game. I think I said it in the note. I hiked probably close to or over 100 miles while I was gone. A lot of physical exercise, getting up early, good afternoon naps. It's like the focus is on healthy eating. And boy, it was unbelievable. It was the best hunt of my life. And probably what I've said to a lot of people is like top 5 outdoor experiences I've ever had. Private land, we met some really, really, really great people. And just had, a lot of peace and quiet. One thing that's really cool when you get way out there that my friend that went with me, he really likes the fact that there's no light pollution. So you don't have the lights of a city that kind of glow into the sky. It's just dark, and so you see the Milky Way, and the moon is really bright, and the stars. Bright moon at night's not great for elk hunting because a lot of times they can see really well. They stay up all night long and they're not as active during the day. But it's just something you got to deal with because we live in a world that's got a moon that floats above us and lights us up in the night. Anyway, it was just a lot of fun to do it, and a lot of just good experiences. And again, just really relaxing in a cool, beautiful place, and to have all that ground to ourselves was just a blessing, and I absolutely loved it. So we're back. This is kind of a quick episode just to say hello to everyone, say thank you. I'm getting the antlers for my elk cleaned up. I was fortunate enough to get a really nice one. My buddy shot an absolute monster, but I don't take it for granted, and I'm gonna get it cleaned up. I'll probably have it in the background in another few days. I'll probably get a hold of it. And next episode, I'll show everybody what they look like, in case you were wondering. And I'm curious to talk to the couple from Texas again to see what they thought of their trip to see. I don't know. It was the first phone call a couple weeks ago sometime, so I'm not quite sure. Anybody that has had conversations with me in the past, if you want to revisit those, you can get a hold of me. Again, this is a quick episode 58, just to get back into the swing of things and let you know I've kept an eye on markets. Things are still in really good position for annuities. It's a great time. As far as the gold and the silver, actually commodity based, there's some indexes you can follow that give you prices on that. I expect to see a bounce in the gold price and silver in the next year or so. There are indexes you do that have elements of that, or have indexes for that will track those prices, so you're not just stuck to the S&P 500. Remember, index annuities have fixed rates. They've got commodities-based indexes, equity-based indexes, and even we got real estate. And they do some bond stuff too, which I don't really see the point of following bonds. I mean, the annuity is a bond. We've talked about that. So a lot of interesting, comments you can have about where bonds have fit. A few people have told me, man, the bonds, I lost money on those too. Rates go up, the bonds drop in value. It's kind of a double whammy. I've talked for years about how index annuities are bonds plus. The insurance company owns the bonds. You get the wrapper of the annuity, so you get to own the bonds without the interest rate risk, and by adding the reserves of the insurance company for safety. So taking a free withdrawal from annuities does not have the interest rate risk associated with bonds. All of those things, just different lessons over time. Here we are. I'm trying to help people make good decisions. And if you use annuities, first and foremost, you want to know that that's the right option. Then you got to decide where to fund it and how it fits with everything you need to do. So income planning, required minimum distributions, long-term care, kind of goes back to my 5 keys of retirement. May do a review of that if I can fit it into the context of some sort of plan. So anyway, looking forward to it. I've got probably 4 weeks before I go do anything major. And then again, majors, just a 3 or 4 day, a long weekend trip. But I'll be around and try to get a lot of work done. We've got some pending contracts. We want to get those sewed up. And I'm here for anyone if you need something. Again, episode number 58. You can go ahead and subscribe to the YouTube channel if you want to see the video, or you can subscribe to any of your favorite podcast apps on your phone, Google Podcasts, hosted on Casto, Apple, Spotify. There's a bunch of them. So whatever you like to do, however you like to get the information. So here's a little bit of an update on what's happened in the past 2 weeks. I'm back. I've enjoyed it, and I'm looking forward to helping you guys. If you need something, give me a call, 800-438-5121, or schedule a call, top right corner of any page on Talk.Com. Again, episode 58. My name is Bryan Anderson. Thank you guys so much, and I will talk to you next week. Okay, bye.
You have been listening to Annuity Straight Talk. The preceding information is for informational and educational purposes only and does not represent tax, legal, or investment advice. The views expressed by guests on this program are their own and do not necessarily reflect the views of Annuity Straight Talk or its partners. No information presented today should be acted upon without meeting with a qualified and licensed professional. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Guarantees are based on the financial strength and claims paying ability of the insurance company.